Stocks have been dropping lately because of different reasons, which we're going to talk today. Hello everyone, welcome back to the channel. Today we're gonna talk about what's happening in the stock market right now, why stocks are dropping or which ones are going down or up, and what are some predictions many people and I have for this new year 2022 in the stock market. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Now, as we can see here, the S&P 500 is down today 0.12%, but it is still down 0.08% in the past week. Now, if we check the Nasdaq, we can see that it is actually up 1.14% and it is down 5.89% in the past 5 days. While the Dow Jones, we can see that right now it is up 0.14% as well, but it is also up 0.89% in the past 5 days in comparison to the S&P 500 and the Nasdaq. Let me tell you that a lot of different things have been happening in the stock market in 2020, 2021, and now 2022. We can remember that in 2020, it was crazy. Stocks went up massively, almost every single sector, every single industry. Then in 2021, we saw how stock crashed massively, mainly growth stocks or small cap stocks, and now it is getting weird. But we can see here in this graph that we found from this article called Stock Market Briefing Selected PE Ratios, in which it talks about the forward PE ratios for large cap, mid cap, and small caps. And we can see right now that according to this study, which is correct, those big large cap stocks have been going up since this is 2020. This was exactly when the crash happened in 2020 because of the pandemic. Have been going up since then, and even though it dropped a little bit, it have been kind of constant, stable in that price range. But then when we see mid-cap stocks, they drop massively, went up massively, and have been dropping, but are actually at a nice price at the moment and a nice valuation at the moment. But when we see small caps, they went up massively and crashed, have been crashing for the whole year, and they are below their normal level or the level that they should be. That's why people right now are seeing more opportunities in both small caps and mid caps than large caps, because we can see, for example, stocks like Lemonade, which is a small cap in my opinion, went up massively in 2020. It got to $180, even though it shows here $163 per share. It got to $180 per share, and now it dropped 76% since that moment. And obviously, when we compare it with stocks like Apple, for example, we can see that the stock is still up massively even from 2020. It is up 212% since the crash in 2020. And if we check Facebook as well, even though Facebook have been having several problems, but still is up. Yes, it went down a little bit because of what's been happening lately, but it is still up massively in comparison to small caps. But we gotta understand that small caps got really hyped up and really overvalued in 2020 and the beginning of 2021, which is why at the moment everyone loved those stocks. And it is funny right now because I get a lot of comments saying that they hate my growth stock speaks like Fubo, Lemonade, Shift, Wish, or Tattoo Chef, or whatever, because they are down massively right now. But when Lemonade was up at 180%, everybody loved it. But now big small cap growth stocks are really bad for everyone, as they are losing money at the moment. But let me tell you that even though I understand it is awful to see how you are losing money in a stock like this one, it is actually presenting a nice opportunity in the long term, because we can see that these big cap companies like Apple or Facebook that I just mentioned are getting really extended at the moment. Because yes, I love Apple. I understand their valuation. I understand their company. I do a lot of research on their company because I love their products and their stock. So I invest in Apple. And obviously I'm happy that it is at $179 per share because I'm making money. But I understand that it is getting really high at the moment. And I will not be adding at these current prices, because I believe that one thing is going to happen this year, which all these big cap stocks that have gone up massively like this one, their growth is going to be constant or will even slow down this year. So the stock will either trade sideways for the whole year until they give time to their fundamentals to reach their correct valuation, or the stocks will drop this year so the valuation could make a little bit more sense. So that is what I think it will happen this year. But now, talking about big caps, we can see that Apple hits $3 trillion market cap, becoming its first company to hit the mark. And that's what I'm saying. I obviously love to see this because I love Apple, but Apple officially has the $3 trillion market cap 2 years after its market cap hit $2 trillion, which obviously is incredible for them and is a huge growth for the stock, but it is not normal for this kind of company because we can see that at the moment, the company has been having a nice growth, but that growth is either going to slow down or stay at the same growth. And we can see that right now, according to analysts, they are expecting for companies like Apple to see a growth of 4.40% for 2022 and 5.10% for 2023. Now, I do expect a higher growth than this for Apple, but that is what I'm saying at the moment with big cap companies. They are going up that much because of what they have done in the past years and because they are safer stocks, and we can see that growth stocks and small caps have been going up because they were really overvalued. So a lot of people sold their stocks or their shares from those small cap stocks and started investing in these big cap tech stocks. But that has a limit. And the limit, I think, it is now. I think that, in my opinion, we're going to see these big cap stocks either trading sideways or going down in the next few months. Now, I can be wrong. The stock could continue going up to the moon. But in my opinion, the valuation does not make sense at the moment. Apple at $180 per share does not make sense at the moment for me. I'm not investing at this current prices, but I'm still holding my position, even though I know that many of you like to sell when you're making profit. I'm not, unless something different, something changes from the company, but I'm not adding with this in this current position. The question is why the stock market has been dropping. And one of the reasons is this. We can see that the COVID cases are going up massively, and we can see that in every single country. I'm here in Venezuela and we can see a lot of people getting COVID. I can see every single Instagram story, and a single day I can get at least 5 friends that have COVID, because we know that this new variant, the Omicron variant, is really, really contagious. But the thing is that many people are worried if we're going to see lockdowns again because of this. But in my opinion, I don't believe that will happen, because the difference from now in comparison to 2020 is that yes, we're getting a lot more cases. We're getting a huge amount of cases daily, but the variant apparently is not that lethal. Maybe it is because of the vaccine, but right now hospitals and ICUs are not as full as they used to be in 2020, thank God, and deaths are decreasing as well. As we can see here in COVID diseases, we can see that even though COVID cases have been going up lately a lot, COVID disease have been going down since March of this year because of that, because it is way more contagious but not that lethal. So that's why I don't believe we will see lockdowns like in 2020, even though cases are crazy at the moment. Now, here are 5 predictions from Yahoo Finance at the moment on according to what they believe what will happen in this year 2022. And strategists are rocking 5,000 plus calls for year and S&P 500 targets. Profit estimates by analysts remain on an uptrend, as if to laugh at a real threat of stubborn inflation. Stock valuation are well above historical norms, ahead of interest rates from the Federal Reserve. Just money chasing money at this point, right? One of the things that they are talking about here is that stocks don't go up forever, which is what I've been talking lately. There is likely to be at least a 20% market correction in 2022. Chat up any market pro and they will acknowledge being worried how a stock market trading at record multiples and driven by a handful of tech stocks like Apple, etc., will react to an increase in interest rates. Those increases are coming. Now, this doesn't mean you go to cash in January. What it does mean, however, is to begin doing homework on potential defensive investing in your portfolio, which is what I've been telling you guys. I'm not planning on selling all these big tech companies from my portfolio like Apple, Microsoft, Facebook, Google, Amazon, and more. No, I'm planning to continue holding them, add to my position if they drop and are at a nice prices, but in the meantime I'm actually adding to all other of the mid small cap stocks such as Square, Shift, Lemonade, Carnival Cruise Line, Wish, Fubo, and more, as they are presenting a nice opportunity at the moment. And as you know, I'm losing money in most of those stocks as well, as I've talked a lot about that in my videos. But right now, the best 10 performers in my portfolio, which I did a video about it last week, are mainly big stocks. We can see that Amazon is up big, Apple is up big, Facebook is up big, Microsoft is up big, MasterCard and Visa are up big, and even Disney, even with the latest drop, is up big in my portfolio. While we see stocks like Square, which I believe I have a nice price of $160 per share, I'm actually down 6.67% in my position at the moment. If we see Lemonade, I'm actually down with this stock at the moment 28%, which is a stock that I used to be up about 100 or even 200% when it got to $180. But that's what I wanted to talk with you guys. I get a lot of comments saying that you guys hate this growth stocks, but you guys used to love them when they were really overvalued and hyped up. So what did it change? Because in my opinion, a lot of these companies' fundamentals have improved in the past year as their stocks have been crashing. But now many want to sell because they are crashing, but not because something changed with their company. I understand that Wish, for example, is an exception. But if we check companies like the Two Chef, like Fubo or Lemonade, they have been growing. They have been growing this year while the stock has been crashing, giving time to their fundamentals to catch up with the valuation. And that is exactly where I see opportunity in the stock market. That's why I've been adding to these stocks even though they continue dropping, and I continue seeing my portfolio going down in these growth stocks. Yes, I also invest in the S&P 500. I also invest in Tesla, in Google, in Netflix, in Facebook, in Apple, and all that. And that has been kind of balancing my portfolio because of that, because of my diversification. But I'm not adding that much to those stocks as I'm adding to the small mid-cap stocks at the moment, because I believe those big tech stocks are getting really high at the moment, and I believe that this year things might change. But I know that I might be wrong, and analysts might be wrong, and this could continue being like 2021. We could continue seeing big stocks going up massively and small and mid-cap stocks going crashing even more. I don't believe that is what is supposed to happen, but as always with the stock market, we never know what is really going to happen. So that is what I'm doing with my portfolio right now. Even though it is dropping, we know that it is mostly dropping because of COVID cases, because forward PE and PE ratios are getting really extended, and because of predictions of market crashes or economic crashes this year. Thank you, and see you next time.